Welcome back to another video. It's Shoddy Trades, and in today's video I'm just going to be going over this past week price action and just how you could have used it to trade with Goldbach and CLS. So to begin, this was Friday on USD JPY. As you see, it was hovering around the high of the 243 range for Goldbach, and then for our 27 range, you see we have that Tuesday low of week for CLS, right, at the low. And then there is the 27 high there as well. And then price came up, wicked into the breaker area on Monday. So you could have taken that short because this is our distribution stage within our manipulation session. Because manipulation for Goldbach runs 11 p.m. to 5 a.m. So this candle took out a high from our manipulation fractal session into that breaker area, and then come Tuesday cycle, that low is made, and then that low holds until the Friday cycle's over, and then once Thursday comes around, you see that's that distribution session, the 5 a.m. to 2 p.m. distribution session, and then this is the fractal accumulation session. And you see how that tapped into the breaker area, took out our manipulation high, and then there was news Friday, so this was news, but you could anticipate that from the highs and the rejections, and then also the 243, which is what you want to use for bias, that was at the high as well. And then it sold off for pretty much the rest of the day. So you have multiple trades. You have that Tuesday low of week trade, and then you have that fractal distribution stage taking out manipulation high, and then you have fractal accumulation stage taking out our fractal distribution stage high that was in our manipulation session, and then you have that a rejection pretty much right here of the high of the Goldbach, and then sell off. So that was UJ Friday. Now here you see for Goldbach, the low of the day was created in that manipulation stage early in the morning between 1:15 and 2:40 a.m. Okay, and then if we turn on the DR, you can see how price rejected the low of our Asia range DR, and then eventually once that ODR starts, it breaks through that. Price comes back down, rejects the IDR and the DR, and then it expands up. So it was an expansion. And you can kind of see the market maker model form throughout the Wednesday and into Thursday. All right. And then if I turn on the 27 range, you see that was a rejection at the low, and it's also a reclaim. And then you have another multiple rejections at this breaker area right here. All right. So that's how you want to be using that. Let's see what we have here. Oops. Right here we have, there wasn't really a good London session. There was news that day. I wouldn't have taken nothing. Maybe right here, since that was a breaker rejection, I probably could have shorted that. But we broke through that DR, and 80% of the time, the low of that DR is going to hold if you break through the upside, and vice versa to the downside. Let's see what else we have here. Right here we have a Tuesday high of a week, CLS, which is mainly what I like to look for when I trade. We don't have, let me turn this off real quick. We have a break right here, a close below the DR, just later in the day, but later in that session, but price still comes back up, rejects, and then sells off. And then if I turn on the ranges, you see it rejects from that breaker area right here and right here. And then that Tuesday high was a rejection from the high of the Goldbach level. All right. And then say you don't catch any of that or whatever, just use fair value gaps. Inverses, regular, whatever, just use fair value gaps and turn off these. So like if you have bias for the day, so let me find an example here that's not news related, because like I said in the previous video, if you have news, then bias or the DR is less probable to hold. But then you want to use the DR on the 5-minute chart. You want to watch for a breakthrough on the 5-minute chart. But I'm gonna go right here. So this was Monday. So you see price broke through below the Asia DR right here, right? And then price eventually comes back up. And then there's a hippo, a 20-minute hippo right here where price rejects from, and it also rejects, well, it doesn't even come up to that Asia midpoint, but that's a rejection from there. And then you just want, if you know bias, you just continue doing the same thing. Like you see in this case, price broke above the DR and then below. Well, wait till it loads. It rejected from the high of Goldbach, and then this is our Tuesday high CLS cycle going into Wednesday. So you can expect that continuation to the downside. And then, like I said, you just want to be using fair value gaps. And I use, remember, 17-minute, 10-minute, 20-minute, and 81-minute. So like in this case, there's a fair value gap here, here. There's one here that holds. So like if I go here on the higher time, this is the 20-minute time frame right now. If I go back down to the 5-minute, and then you'll see how once you break, like there's plenty of entries to choose from, and then you can even enter again up here, and it still sells off. So that's how you want to be using that. Let's go to a different asset to look at here. So let's see, we have breakthrough right here. Yeah, that high holds, and then we do have a breakthrough below, but it doesn't hold. We have a breakthrough above as well. News and Fridays is just lower probability of holding, but it does hold at times. Right here, Asia, or this isn't Asia, this is the ODR. ODR holds, and then if we use Goldbach, we're on this is the 243 range. See price comes in to that 243 range, and then it comes up and rejects within that high in ERD, and then it does end up selling off. But like, if we go to the 20-minute time frame again, and let me find, yeah, right here. So you see, there's a 20-minute fair value gap, and then if the fair value gap is large like this one, I like to mark out the CE of that as well, and then wait for price to either, well, on the lower time frame, go up in there, and then obviously on the higher time frame, chance it's just a wick. But if we go back, and then we see how price does come up above that 50% range and then closes off, so you can use that. And then on the 27 range for Goldbach, that's not the high, sorry. Price wicks into that breaker area, and then obviously rejects, sells off. Let's see what else here. What else do we have? Right here, price does break through the DR, but it doesn't really give you any opportunity to sell. It was just really or buy. I mean, you could have bought at the Wednesday low. If you know the CLS cycle here, so you have ODR, price breaks through it, and then stays above, and then continues to the upside. So here it looks like Monday was that low. So if I turn on Hoppler ranges, let's see where price rejected from. It rejected from the low, and then obviously, as you know, that's in that distribution stage after taking out manipulation low. Like, these two sessions, like these two cycles between fractal manipulation and fractal distribution, you're going to see a higher low form more times than not, and you could trade from it. And then if not, just wait until that Tuesday CLS cycle. So like right here, you can see how price made the high in that fractal manipulation cycle, but inside of our main manipulation leg, and then that held. And then there's a ton of entries, obviously, because EU was ugly compared to GU. But like right here, there wasn't anything for that fractal manipulation cycle. And then that Tuesday cycle comes between 3:30 and 5, that low was made, and it continue higher. And then this low was made. It wasn't in the breaker area or anything. It looks like it was just outside of the low. Let me see if, let me go to the 81 range, because sometimes if the 27 and 81 are adding up, our price will do a stop run outside of the 81 ERD, which in this case it didn't. There was none for 81, so it was just a Tuesday low of week, not inside the breaker though. But it is a reclaim. So that's how you enter that. From here, you see we have there is news. It looks like, but that's 3:30, which is the start of Tuesday cycle, and that holds that Tuesday high into the breaker, and then sells off. And then you can see price rejecting the IDR level as well, and then it does break through, but it's not until later in the day. Here, same thing, nothing in the manipulation cycle. 330s right here. So you have that Tuesday low right here, or Wednesday, I guess, Wednesday low. And then that Friday cycle at 8:30, or 6:30 to 5 to 6:30, and then 6:30 to 8, and then so there's that right before that Friday cycle, it reclaims that breaker level and then sells off. So I got a little confused on that CLS cycle. I was trying to do it all in my head, and because it's not on here for some reason. Here you have a reclaim at the Goldbach high, but nothing I would have really taken, as there isn't a Tuesday high or low really anywhere. Price breaks through that DR and then does come back up and holds, and then continues to sell off. That was an ugly day. Here you have that a low and manipulation cycle. It's not really inside, it's just outside the breaker area. And then it's an upside expansion. As you see, price broke through the DR right here, comes back down, rejects a level, comes back down again, wicks into the breaker area, and also reclaims the level and continues higher. Right here we have that distribution low, that fractal distribution low right after manipulation leg at the low. And when that happens, I mean, you're going to want to enter no matter what. Let's see right here. Wasn't much for London session. Price broke through the DR. It does come back and holds. It doesn't come back below this low right here. And then this level right here gets reclaimed by this wick, and it continues up. And then eventually it sells off during New York, but not until after that Friday cycle, which is after 9:30. Right here, there isn't much. It looks like there's a news wick right here. You have a distribution high after taking out that Monday cycle, and then you have a Tuesday low for now up until that Thursday cycle, and then there's news that hits New York, so you have to anticipate that. So yeah, I mean, that's just what you want to be looking for, honestly, with Goldbach, DR, and fair value gaps. I'm gonna show a couple more examples of fair value gaps. We'll just use the 17-minute. See what we could find here from the past few days. Oh yeah, also, so if I pull up the 243 range real quick, you'll see how at this time, if I rewind it right here, oh, was it not this one? Probably must have been GU then. Was it GU or was it? Let me see here. Yeah, okay, right here. It was the 81 range. See how the 81 range had perfectly rejected that high? This was Tuesday night for Asia, and then there was just a downside expansion afterwards. So like the higher power of 3 you look at, it's better for bias. I just normally stick to 27 range because I know what I'm looking for. But if you don't and you want an easier way to look at bias, just use the 243, 81, and so on. All right. But now going to fair value gaps, I prefer to use inverses because they just work better for me, in my opinion. So like right here, you see a 17-minute inverse, and then mark that out. Let me delete this one. So you see that 17-minute inverse, and if I go to the 5-minute here, you'll see how after it breaks through, price rejects, and then continues to sell off. And then the Hopper ranges, if we use that, look where it's at. It's inside that breaker area. So that's just what you want to be looking for. I hope this explains some stuff and makes some things a little bit clearer for you guys and how you can use certain things to better identify trades. If you have any questions, feel free to join the Discord and stay tuned for more. Shotty out.